Hello, and welcome to Tech Latest from Nikkei Asia, where we bring you the freshest updates from the technology sector in Asia. From Nikkei Asia's Tokyo headquarters, I'm your host, Katey Creel. This week, we're joined by Yifan Yu, our correspondent in Silicon Valley, talking to us about Intel. Welcome to the show, Yifan.
Thanks for having me, Katey.
So this week, as mentioned, we're talking about Intel, the company that gave us Moore's Law and for just decades has been synonymous with American chipmaking. But in the past, 3-4 years, things haven't been going super well for them. Former CEO Pat Gelsinger's goal of moving into contract chipmaking has not exactly gone to plan. Yifan, could you tell us a bit about Intel's setbacks on this front?
Well, where do I even start? They are having troubles in all fronts. If you look at their stock price this year, it has gone down, I think, nearly 60% year to date. That's just a clear indication the Wall Street investors are not super happy with where they are right now. So, first, their chip designing business is missing the boat of the AI boom, while other chip makers like NVIDIA, AMD has been cashing in with this data center AI chip and AI PC chip. Intel, on the other hand, is not doing so well and is not competing at the level of NVIDIA and AMD. And on the other hand, the foundry, which is a contract chip making business, meaning they are manufacturing chips for others, is also not going well. They have committed nearly $100 billion to foundry. But right now, they don't have any real clients that can give them money back for their foundry investment. And that is part of the reason why a lot of people are speculating Gelsinger has to leave, because he was the one behind this enormous foundry investment plan that just haven't really proved its worth to the date.
That's a good point about Gelsinger. I think when he was announced that he was leaving, it was a little bit of a surprise, but in hindsight, maybe no one was really too shocked by it, because the foundry plan was basically his brainchild, right?
Yeah, I think a lot of people think foundry is actually Gelsinger's first love. He started out as an engineer at Intel when he was 18.
Wow.
So he was really at the peak of Intel's glory day to witness it as both a chip designer and chip manufacturer. So he really wants to bring Intel back to those glory days. It's just sad that hasn't really panned out yet.
Well, he's not the only one. Washington also wanted to bring back the glory days of foundry for Intel with, was it $7 billion in CHIPS Act support?
It's actually closer to $8 billion, but they actually get $600 million short of their initial terms they signed with DC. And DC say that it's because they also get an additional $3 billion contract of Department of Defense. But I think it really brings you a question that the $600 million less CHIPS Act funding really makes you wonder, does Washington, also become kind of skeptical of where Intel Foundry is going?
Right. And part of the reason for that skepticism might be who they're up against. TSMC in Taiwan and South Korea's Samsung are just so dominant that I think a lot of people might be seeing it as difficult to break into that market for Intel.
For sure. If you look at the chart in our story released last week about Intel's foundry trouble, we can see clearly TSMC has a dominant position in global contract chip making market. It has over 64%. And I think that market share is only going to go up just because they are the only one who's been able to manufacture NVIDIA's Blackwell and other very advanced AI chips that are in high demand right now. So it seems like, we don't even see Intel's name in that chart yet. Whether Gelsinger has promised, they're going to catch up with TSMC and Samsung soon, in 2030, and whether Intel is on track to achieve that, nobody knows for sure. It's just looking at the numbers right now, it doesn't look too good for Intel.
As you said, they don't even show up on the chart. Their share is so small at the moment.
Yeah.
And I think there's also some question about how committed Intel is internally to sticking with the foundry ambition. I know they say that it's still important to them, but at the same time, they've also talked up how important design is. So there's probably a lot of uncertainty going forward for them.
For sure. If you look at the announcement where they say Gelsinger going to retire, the board is very clear about they are going to put the product group, that's their chip designing business, as a front and center. I think it's a very clear sign that the board is very anxious that their AI chip design is falling behind NVIDIA and AMD, and they believe that's a real moneymaker. And they demand the foundry business to start to make returns for the investors, which I think is fair. You can't just pour in billions and billions of dollars and don't see any return, or just a fraction of the return after a few years. At the same time, also Intel is a public company. As we can see from their stock price, they are under a lot of pressure from Wall Street investors. They may be concerned about activist investors coming in if they just continue going down the route Gelsinger was doing. So yeah, there is definitely fair that the company is trying to come up with a new strategy that will comfort the Wall Street investors, so the activists don't just come in and take over the company.
Speaking of people coming in potentially taking over, I know it's quite speculative at this point, but would TSMC or Samsung have an interest should Intel decide maybe it wants to spin off its foundry business or maybe exit it completely?
Oh, I'm sure they'll consider it. I'm sure the foundry asset at some point has become quite a hot potato for them. But it's really difficult for them to offload that part of asset, partly because just like Washington won't allow them to do. It's because, like we said, Intel is the only American chip maker who is able to make really cutting edge, leading edge chips on American soil.
Right.
And that has national security importance to DC. And on the other hand, they already signed the contract with Department of Commerce for the CHIPS Act funding and Department of Defense for the additional $3 billion contract. And under those CHIPS Act agreements, Intel has to remain the biggest shareholder. And there are a lot of other clauses that forbid them to sell to other companies, either through like a private transaction or through an IPO. So whether they want to sell is a totally different business from whether they can sell. Yeah. So, but if we're talking about, maybe after Trump takes office, this guy is not the biggest fan of CHIPS Act. He may do something to revamp CHIPS Act that makes Intel can sell the foundry business while receiving the funding. Then we can talk about potential buyers.
Right.
It's really fair to ask whether TSMC and Samsung will be interested, because they are virtually the only one in the market that has the capacity, the capital, the expertise, and also potentially the interest to acquire such asset. First of all, like Intel Foundry, they are building gigantic fabs in America across 4 states. That's including their advanced chip packaging operations. Nobody has that kind of money, or only a few names have that kind of money to buy an asset that scale. On the other hand, whoever the new buyer is need to have the expertise to run a fab at that scale. Going back to the chart we were referring to, frankly, TSMC and Samsung are the only ones who are having the expertise in the past few decades to run fabs at that scale.
So would that rule out NVIDIA as a potential buyer? I know they don't have any experience necessarily in fabs, but they certainly have the deep pockets.
Katey, there's a reason why all American chip companies except Intel become fabless in the past few decades. Compared to manufacturing chips, designing chips is a much higher profit margin business. And for NVIDIA, who's in a perfect position right now in the AI boom, and they're going to cash in billions and billions more dollars with their Blackwell platforms, it's really hard for me to imagine they will want to go to a lower margin business like contract chip making, even though, it may in some way reduce their production constraints because their chips has been so much in demand and TSMC just can't keep up.
Right.
But on the other hand, Intel just doesn't have the advanced chip manufacturing ability to manufacture NVIDIA's chips yet. So why bother?
That makes sense. I just think these days that the pure economic considerations of chip making are not quite what they were because there is so much more political pressure, political will to bring chip making onshore. So maybe the calculus going forward, if not right away, could be different. And we could see more American companies trying to get into the very expensive and very difficult business of foundries.
That is fair, but we can clearly see the direction NVIDIA is heading towards. They are trying to emerge from a chip company to a software company. They are spending a lot of resources in developing the CUDA ecosystem. That's the AI ecosystem they want to build around all companies that eventually will replace their biggest part of revenue income, that is their chips. So Jensen Huang has clearly said the CUDA holds a lot more potential than chips because one day they don't even need to sell chips just because everybody is using CUDA to develop their AI software. So it's clearly they want to spend more on the software side than the hardware side.
Interesting. So what's next on the horizon for Intel and other chip makers?
Well, 2025 is promised to be another exciting year for AI and obviously AI chip makers, though there are already suspicions and worries that the whole AI craze has calmed down a little bit and the demand for AI chips will not be as crazy as 2024, which is probably why NVIDIA's Jensen Huang is going to CES in Vegas in January. He's going to do a whole speech at the first day of the event. I'm sure he's just going to talk a lot about AI and try to drum up the demand for AI again.
Yeah.
At the same time, Intel's leadership team, we don't know who's the CEO going to be or whether the new CEO going to be there, but they're going to be at CES as well, along with AMD.
Oh, interesting.
So I think it's a lot to looking forward to in terms of new products, new chips, along with like the demand for AI chips in 2025.
And you'll be covering CES for us this year, won't you?
Yes, stay tuned for our coverage from Vegas in January.
Looking forward to it. Thanks so much for joining us, Yifan.
Thanks, Katey.
That's all for this week's episode. For more of Nikkei Asia's tech coverage, visit asia.nikkei.com. You can also subscribe to our weekly tech newsletter, which will be delivered to your inbox every Thursday. Thanks again for listening, and check back with us next week for more updates on the tech trends that matter.